Or even I don't remember, ma'am.
Didn't get you, sorry. Okay. The concept of information, what is data, what is information as such, I mean, this is not something new because the same topic was done in MA, PM, and the characteristics of information, all that was already done. So basically, as of now, what is that we have to look into is, see, what is the need for collecting information, because information is the base for all decision making, all decisions that are taken in the organization. Information is the base. So we also see, I mean, we have to look into what are, now this is studied in context of the technology, the technological changes that are taking place, and then what are the various elements of technology. We need to have an understanding about that, because if the organization has adopted some technological changes, and then how would the organization be benefited out of that, or some suggestions have to be given. So what are the latest things that are happening in the corporate world related to technology? If we can have that idea about that, see, the answer related to those topics can be answered well. So that's the purpose here. So we are not basically looking at the theoretical content about what is data, what is information, etc. See, these topics were all done in MA management accounting itself. So the students would be knowing about what is the meaning of information. So what are the different sources of information? We see that there are internal sources, external sources from which the data can be collected, processed into information. But as of now, the latest thing is that data can be collected from transmitted sources also. That is, when the data is transmitted from one device to another device, also data can be captured. The digital marketing tools that are available are able to capture the data. So the data is now available, and available data is large in size also. It's not just some simple summarized data, but then um, updated data is also available, because it is possible to capture the data of the customer. So if the customer's mindset can be known by the seller, then decisions can be, I mean, to cater to the requirements of the customers, the changes in the production pattern of production of goods and services can be taken up accordingly, and then they can be provided. So right now, at this particular level and for this particular paper, we would be focusing at that level. So let's not look into what is the meaning of data, information, etc. So normally, if it is the internal external source, so we generally see that the data is available free of cost. But then if it is, now that we are discussing about transmitted data is also captured, I think some cost would be incurred to capture those to capture that data. Then by capturing the data, and if some benefit is derived, that benefit should always exceed the cost benefit analysis. So the different types of data, qualitative, quantitative, I think you know that the data, once it is captured, then that who should have an access to the data and the information. um, Also is important to understand, that talks about the access control. So who would have an access to the data that is stored in the data base or the data repositories? Who would have the access to that? So there are different types of access controls. Right at the time of inputting the data also, there are certain input controls, like maybe after if the data is inputted into respective fields, so anything which is not suitable to that field would not be accepted as data. Like suppose it is a numerical field, and if there is alphabetical information trying to be fed into that particular field, it doesn't accept. Likewise, so specific fields into which the data has to be inputted. Then we see that um, from time to time, I mean, from a set of entries are considered as a batch, and then after every batch of entries that are inputted, there's some kind of a check that takes place internally. So that is input controls. We can talk about it. Then, while processing the data, also there are different controls. Like it says audit trial. Audit trial, how does it happen? So the internal audit function or the internal auditors can also check about how the processing is happening. Like they can enter into the database, or if the data is available online, and then they can enter into um, or access that data like an outsider or a client, and then check whether it is processing as it is supposed to be. So that's an audit trail, or the entire database is copied onto the system of the auditor, and then auditor can, using the software, can check what is that. So that is processing. While processing also, there could be an audit trail, or output also, who should have an access to the output. So encryption is one thing, password protected. See, only those that have the key, uh, the security key, will be given an access to the output that is generated. So such kind of see, like we, I mean, there's so many issues as of now going on related to unauthorized access to personal confidential data of others, and then we know that. So only those that have the security key will be provided an access to the output. So WhatsApp also says that it is end user to end to end user encrypted or something like that. Only those that are intended to receive the message will be received. No one else would be able to view the message. So that is what is the what WhatsApp claims. It's something like that. So only the intended user with who has the security key will be able to have the access to the output. So that is some kind of a control which is implemented there, so that the unintended users will not have an access to the output. After that, what is the need for systems development? See, when the technology is changing rapidly, so according to that, the systems also have to be developed. So that is the main reason what we see, that the need for new technology, faster innovation, because many things are changing in terms of designing the designs. Then we see that the way the processing is taking place. So because of those faster changes in the technology, all those things have to be adopted. Therefore, there is need for systems development, because the business has to grow and uh, take up diversification. There is a need. Then, because the competition is increasing, to face the competition and survive in that particular industry, I think there is a need for systems development. Even the service industries are also of late using technology. Therefore, for that reason, then there are many other advanced accounting methods and techniques that are coming up. So those things can be used with the help of systems. Therefore, there is need for systems development. We have the concept. See, this concept of what is information system, what is information technology, was covered in PM. I think you study PM also, no? CPM is the paper title. Basically, it's the syllabus of PM of ACCA. You study that? ISC students.
PM, ma'am.
PM.
We have done PM. Yes, yes.
So, as part of PM syllabus, we see these topics are covered. That is, what is the meaning of IT? What is the meaning of IS? What are the different types of information systems that are available in an organization? So, these topics also were done there. In simple terms, if we put it across, the information technology is it refers to the hardware. Information system is a combination of hardware and software. Any information system that can provide information to the management so that they can take decisions, we call that to be as an any system which provides information is called as an information system. So management information system which provides information to the management for decision making. See, in the hierarchy of the organization, there are three different levels of management. So we see this, there's a strategic level, that's the first one. There is a middle level, then there is an operational level. So each one of them have a different role to play. They are involved in different kind of planning. So suitable to that, if the information is can be provided, and that will be helpful to them for taking better decisions. So at the top, we see the strategic level is there. So the strategic level, one second. Yeah. The strategic level is involved in planning for the entire organization. So earlier also I must have mentioned that. See, they plan for the organization as a whole. What would the organization be doing in terms of what are the goods and services that would be um, produced and sold, and then where would they be selling, which market would they be selling, domestic, international? Such kind of plans are taken up by the strategic level. In detail planning about resources allocation, and then um, assignment of work, allocation of work, such kind of planning is taken up by the middle level. And then we see the third level, which is the operational level, where they are involved in implementation of day-to-day plan. So all these three levels also are involved in some kind of planning. So the strategic level, because they are planning for the entire organization as a whole, the summarized information, if it is provided to them, that is useful for them. So there is an information system called as Executive Information System, EIS. EIS provides information on a summarized basis. So gives senior executives access to internal and external information in a summary form with an opinion. Then again, see, because they need not have the in detail minute details, or many details are not needed. Overall, at an overall level, if there is information provided to them, that is sufficient. So summarized information is provided by executive information system. Yet at the same time, if at all, if they want to look into in detail other details, so that is also possible, because there is an option to drill down to greater level of activities that also is provided by EIS. See, the detailed planning is taken up by the middle level, the management level, or the tactical, functional. These are all the terms. So they would like to have in detail information. So that is provided by a system called as DSS, Decision Support System. Decision support system predicts the consequences of a number of possible scenarios, and the manager then uses their judgment to make the final decision. So those detailed different the number of possible scenarios, what would be the consequences for each of the scenarios? What is the scenario? What is anticipated to happen in the future based on some past information, past trends of what events happened when they are noted down, and then from among them, what are the events that have likely chance to be repeated in future are considered as scenarios. So for each of the scenarios, multiple plans that are prepared, so that would be scenario planning. So for all those things, um, the plans that are required to be prepared for these scenarios, so it predicts the consequences of number of possible scenarios, and then the manager uses their these things to make the final decision, or judgment to make the final decision. So that kind of information, those kind of alternatives, and then different scenarios, and for each scenario possible plans, etc., such kind of information is provided by decision support systems and DSS. At the implementation level, at the operational level, the operational level is involved in day-to-day planning. They are also involved in, see, as they are implementing also, they need to plan on a day-to-day basis. So any kind of information that is required to them at that level is provided by transaction processing system, TPS, a system for processing routine business transactions. Apart from that, we already know that management information system, an information system which provides information to management, is called as management information system. There are certain expert systems. See, they provide data or information about an expertized field, like somebody working in tax department would like to have all information relating to tax. So the expert system will provide all those things related to tax to them. Somebody working in audit department will require the audit related information. So that is the kind of information that is provided to these different uh, expertised people in the organization, to those departments. We call such systems that provide information as expert systems. In the case study, something related to technology, if it is asked, there could be a mention about these things. So you need to elaborate on that. But as such, the chances that exclusive case studies on information system exclusively asked, little rare. Not that we rule out that possibility, but because this is one part of the organization, so in the scenario, a paragraph can be related to the technological changes. So somebody is considering implementing something, and then wants uh, your advice, you being an expert in these concerned field, or you are the management accountant, or a process expert, or some performance expert, or some kind of title given to the student, and then the student is expected to elaborate on that. So you should have an opinion about that. The conceptual knowledge becomes the base. Then talk about what uses can be derived by adopting these changes in the organization, etc. So the question can go in that particular manner. I don't say that there is no possibility. Chances are little less, because the paper title is performance management. So many aspects of performance will be considered. One among them would be technology. So preparing, when you're preparing, you should prepare in that particular manner. Then different IT developments. So conceptually, we should know about what these things are. Um, what is the data warehouse? Data warehouse is basically the data that is captured. That data is all stored in a data warehouse. So it is a data repository. So where all this data is stored. So data warehouse also gives an easy access in future if they want to retrieve. So it provides a facility of retrieving the data. What is the database? If we talk about database, also is storing of data. The data that is captured is stored. But while storing, database allows the data to be processed. Data warehousing doesn't provide such facility. It is only that the data can be stored in data warehouse. It of course, retrieving is possible from both database and data warehouse, easy retrieval, so that later on that can be analyzed for further analyze and interpret, so that it can be provided to the management for further decisions to be taken. Then we see the concept of what is data mining. So the data that is stored or the data that is captured, basically many variables would be there. So is there any relationship between the variables? To find out that, or unearth the relationship to understand whether there is any kind of an association relationship among the variables. That is found out, and that is called as data mining. The concept of data mining says that unearths relationship by analyzing the data in the data warehouse to see what if any, that there is a relationship among the variables, the association among the variables. What is the trend of the data? What is the pattern of the data? Such kind of things can be drawn from the data stored in the data warehouse. We know about LANs and WANs, but the computers are connected for sharing of data in a small area. When the systems are all connected, it's called as LAN. If the area is widespread, but still because they all belong to the same organization and would want to share the data and to have a possibility to share the data easily, we call that as WAN. But of course, off late everybody is connected to the internet. So these were the initial concepts about LAN, WAN, and then intranet. Only when the internal stakeholders in the within the organization, when they are connected to each other to share the data, it was called as intranet. But into this network, if the external stakeholders like the suppliers and customers are also connected, or some business partners are also allowed to be connected to that, those are connected stakeholders. So when they get connected to their network, it is called as extranet. Then we have um, internet. It is a global system of interconnected networks. So multiple things can be taken up by being connected to the uh, network, and network at a global level. So there are multiple tasks that can be achieved with the help of internet. There's another concept called as enterprise resource planning system. Enterprise resource planning system, basically the key concept about ERPS is that it integrates the uh, it integrates the data that is collected from multiple departments. So there would be multiple departments, like first let's say a production department, sales department, finance department, marketing department. There are many departments: HR department, financing department, accounting department. So each of them, that is one source from where the data can be collected, information can be collected. So the departments that are there, so maybe let's say department 1, department 2, 3, so on. So when there are multiple departments and the data is available with each of them, and one more important thing is each one of them would have their own format in which the data is maintained. So ERPS collects the data from all these departments and it stores in a central data repository. But because the data is in different formats, it also makes it or synchronizes or makes into a unified pattern. The data is collected from them, collects them, synchronizes the data. After synchronizing the data, it is stored in data repository. So let's say the production department wants some information about the finance department. So otherwise, usually individual departments would approach the other departments individually whenever there is any requirement. But when there is an ERPS system, it not only collects the data from individual department, it also gives an access to that centralized data, the data that is stored in the centralized data repository. So any department at any given point of time will be able to access the data of the other departments also, even without approaching the other department. So that is what is allowing the departments to be connected with each other. So what is it basically doing is it is integrating the different departments in the organization. Okay, so it integrates the data from all operations within the organization by collecting the data, making it to a unified pattern, storing it in a centralized data repository, and giving an access to all the departments for this data, for this information it is making things very simple, and it is integrating all this data, and then making it possible for each department to be connected with the other department by way of having an access to the data. After that, we see that there's another term called as radio frequency identification devices. These are small devices that can be tagged to the assets. Sometimes when this organization, the size of the organization is very big, and then assets have to be moved from one place to another place within the organization. Um, but identifying the location of the asset sometimes becomes a difficult task, though it would be recorded in the registers, and then there is a tracking of the asset by way of an entry made in the register. Sometimes it also is possible that there may be it may be possible that the entry was missed, and then later on it becomes difficult to trace the asset. So in that case, um, these devices that are tagged to these assets help in identifying the location of the asset. So these small devices are connected to the internet, so they send a signal, and these signals are captured by the Wi-Fi. The um, then it and so it is possible to um, identify the location of the asset. So small radio receivers are used to tag items and hence keep track of the assets. That is radio frequency identification. So we know about cloud technology, cloud computing. So the reason why the use of cloud has become so prominent is because of the size of the data. See, at the beginning of the session, we had started that. So data is also captured while the data is being transmitted from one device to another device. So that is also one source, and of late that is the major source. So as the data is transmitted, so that is captured. So of late we see that there are multiple millions and billions of devices that are connected to the internet. Then the data that is being shared is also large in size. When the data size is large, we keep reading so many so many things related to how many messages are posted every second on the social media platforms, and then we see that the number of videos that are uploaded on YouTube every second. So the number is so big, and the size of this data is also very big. But now the seller wants to know the expectations of the buyer, the customer. Therefore, they are now capturing such data. So the data, the size of the data is very big. How big is the data? If we ask that question, as big as that it cannot be stored on the storage devices of the computer of the organization. So um, for a computer, the storage device is limited. So as much as the data, if it cannot fit into the computer, that data would be big for that computer. So for a mobile phone, for a cell phone, we see that not everything can be stored in that mobile phone. So anything which is beyond the capacity of the mobile phone storage capacity, then that is big data. So big data, the concept of big data is as big that it cannot be stored on the storage devices of the organization. So what has to be done? But this is crucial to take better decisions. It is crucial to understand the mindset of the customers. Therefore, it has to be stored now, stored and analyzed. So all that which is captured has to be first stored. After storing that, the analysis part of it will be taken up, and then after analyzing, the decisions are taken. So where would it be stored? It would be stored on the cloud. So cloud is the storage facility provided by external uh, s- um, this facility providers to store the data. So these are external service providers which provide the space to store the data. So as much space the organization uses or anybody uses, they would pay accordingly. So need not invest huge investment into storage devices to store the data, but only pay for as much space they are utilizing. So cloud technology talks about storing and accessing data and programs over the internet instead of on a computer's hard drive. See, of course, when we look into the cloud computing advantages, disadvantages, if we talk about, we should also understand that. See, when the data is stored on the cloud, multiple collaborators can be connected to that data, and they can also simultaneously process. I think you working in corporate sector, you would be knowing it better that see during the lockdown time, all organizations were running the same manner in the same manner. There was no issue even if the employees were not present at the physical location, because the data which was used to take up the activities was all available on the cloud. So the users or the employees were getting connected to the database that is stored on the cloud, and were able to process that. And then because multiple users from different locations, from remote locations also, we're able to access the data very easily and process the data, and things happened in the normal manner, even if the employees were not physically present in the office locations. So that's the major advantage what we can talk about. Of course, there are issues about since these are external facility providers, they are external entities, therefore definitely the question about the protection of data, security of the data, those questions arise. But then we can also, I mean, talk about it is not they would not breach on the terms and conditions, and then it is not just one user, multiple users getting connected. So confidentiality, to protect the data, maintaining the confidentiality is also an important criteria for the service providers. Therefore, on that note, we can always uh, think about that the data is rightly protected, or the security part of it is taken care of it. So um, I'm a little in detail if we can study about what is cloud computing. So any concern about or any issue about cloud computing which arises in the organization in the discussion in the case study, I think you will be able to elaborate that and give your answer about that. So next one is knowledge management systems. Any system that can enhance the knowledge of the people in the organization, we can call that to be as a knowledge management system. Any type of IT, information technology. Technology is basically about the hardware that helps to capture, store, retrieve, and use of knowledge to enhance the knowledge management process is called as knowledge management system. Then off late, there is a lot of importance given to customer relationship management. All organizations, sellers, manufacturers, brands, malls, showrooms, shops, name it, and everybody um, is aiming and at maintaining good relationship with the customers. So it is, I mean, gone were the days when the focus was on transaction marketing. Mostly, uh, if they were able to sell the product or not was the criteria. That was gone were the days. Now, the focus has shifted to maintaining a relationship. So it's called now the latest thing is it is about relationship marketing. It is not about selling the product, but it is about selling the product to the same customer multiple times. It is only when they can have a good relationship with the customer that it becomes possible. So maintaining a relationship with the customer has become very important to the sellers. Now see, the most common way in which the relationship is maintained is the seller asks the buyer to share the phone number. So that's the easiest way to be connected to the customer. So by sharing their personal information, they keep in touch with the customer, understand the requirements of the customers from time to time. They also share some information from their end about any kind of a discount which is available, or any other advanced features that were enhanced to them, or enhanced to the products and available with them, etc. So all such kind of information is passed on to the buyer. They want to keep in touch with the customers, wish them on special occasions and all. That is keeping a track of I mean keeping a good relationship with the customers. So that has a lot of advantages. The customer gets connected to the seller very easily, and then the brand loyalty can be established, repeated sales can happen. So that is CRM, customer relationship management systems. We have to study about the concept of big data. So big data, every paper wherever there is something related to technology, there is a mention about the big data, because this is all about how efficiently or how effectively the work is done. That is with the help of big data. So just now we've discussed that the data that is captured has become big in size. Okay, earlier days the size of the data was so big that even the standard computers also were unable to process this large volume of data. But now we see that there are big data softwares available. So these softwares are now able to process this large volume of data, this big data, very easily, effectively, efficiently, and the output is generated. So because the seller is now dependent on the analysis of the data. See, when the data, the size has become big, and even if it is big in size also, the analysis of that big data is helping the sellers to take better decisions. So what is big data? The concept of what is big data is, it is I mean, the size of the data is big, as simple as that. So it is extremely large collections of data that may be analyzed. So whether the data size is small or big, it 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 has to be analyzed. Only on analysis some inferences can be drawn out of that. See, gone were the days how the analysis was taken up was from the large volume of data, sample was drawn, the sample was tested, and the result was applied to the entire population. Of course, we understand that there are many drawbacks to that. See, the sample may not be a true representation of the entire data, and therefore any kind of an analysis that is taken up with the help of that sample testing was not relevant. Therefore, now here this entire large volume of data at one go can be taken up. It can be processed, and processed very easily with the softwares of big data. So there are attributes of big data. Here there are 3 V's given, but off late, actually it is the very latest one. It is not just 3 V's, but it is 5 V's. But you also have to add one V when you're talking about it. So one more V should be added. It's 4 V's: volume, variety, velocity, and veracity. That's the fourth V. What's the volume? Volume is big in size. The first attribute of big data is the volume is very big. The data that is collected is from variety sources, or variety different types of data is collected. We see quantitative data, qualitative data. Then the data is either structured or unstructured. Structured is which is placed in or proper rows and columns, or it is properly categorized, classified, clustered. See, depending on the type of data, then similar type of data is grouped together, called as clustering, or predefined areas which are identified, and the data is placed their classification. So likewise, the data, if it is properly processed and placed, then we call that to be as structured data. There are then we see that data is also unstructured. data is unstructured. What's unstructured data? Anything which is not in quantitative form, like image could be data, a picture, a video, a personal interview, a social media posting. All these things are also data, because from that also something can be extracted. So that is basically unstructured data. See, all this unstructured data also is taken up for analysis. So data comes from variety of sources, and this data has to be processed. How is the data processed? All types of data considering, and the size of the data considering that. Now this has to be processed. Now, how would it be processed? Processed at a speed. Velocity talks about the speed with which the data is processed. The speed is extremely fast. It is not only about processing the data that is static at a given point of time, but as the data keeps changing, the data is updated, and as soon as the data is updated, the analysis is also provided. See, the best example what we can take about it is the when the transactions happen in the stock market, the data keeps changing by the fraction of second. So as soon as the data changes, that is updated, the systems update the changes, and as soon as the data is updated, immediately it is processed and the analysis also provided. See, the volume of activity that happens on stock markets, large stock markets, New York stock market. See, we see that the volume of data is extremely large, and it gets updated very quickly. As soon as they get updated, then the processing also happens simultaneously, and the output is given, or the analysis results are given within no time. So the speed with which the data is processed is extremely fast. And above all these things, we should see that the data that is captured has to be genuine. If the data is captured from the internet sources, we all understand that uh, most of the data, or at least 50% of the data which is being transmitted, is fake data. All of us understand that. So there are many reports which claim that the data which is being transmitted is not real. So veracity talks about the genuinity of the data. So before the data is processed, it has to be validated that the data is genuine. Only such data should be processed, so that the analysis and the output that is generated is reliable. Okay, it is trustworthy. So it is important to validate the genuinity of the data. Okay, genuinity, the truthfulness of the data. So that is about the veracity. Of late, people are also talking about the fifth V, which is what value is added to the customer. So that's the fifth V about big data. So any discussion about big data or any element of technology, if it is included in the case study, you should have uh, sufficient information, understanding, knowledge about that you can elaborate and then give your opinion about those things. And then this is processed with some softwares that are available. Okay, example is given here as Hadoop. Then what are the uses and risks? Uses are, we see that, so the uses are widespread, many users, because able to understand the expectation of the customer is the main thing that is possible now with the help of analyzing the big data. But the risks are also equally high, because if there is any issue with the genuinity of the data, it is again is not so dependable. Okay, the data security, data protection part of it, the confidentiality sometimes may arise here. So such kind of risks are also present when large volume of data is used or big data is used. So that's the concept about big data. Everybody of it, like everybody in the sense, all the professional programs, um, the analysis part of it. I mean, everybody is talking about the concept of big data. So this is the most happening thing. See, academically, when you are studying also, it is an expectation that the student studies about what is big data. So tomorrow, I mean, you're all working professionals, so you understand what are the requirements in the corporate world. So if it is about the technology part of it, so the student should be knowing about the different elements of technologies. Therefore, the programs are designed that they also study about the different aspects of technology. Have a knowledge about it. You may be having better understanding and knowledge about these elements of technology. The younger generation definitely are much better than uh, us, like an older people. I think you know things much better, so you should be able to elaborate that and present it in the examination. Then we would learn about what is report writing. So reports are to be written and presented to the management. So in the organization or any particular issue, there is an expectation that they write it in the form of reports. The students are also expected to know about report preparation of reports, because um, if it is a essay case study, that is a 50 marks case study. 50 marks case study starts with write a report. So whatever is the explanation, the content presentation, the topic elaborated, presented with all those advantages, disadvantages, analysis included, critical analysis, suggestions, all of them would be presented in the form of a report. It is not a straightforward, direct question which would be answered or addressed, but it is like presenting some information to the concerned person. So what is the purpose of report? So the purpose of report is talking about the advantages or disadvantages of a particular system, or the suitability of that system, or the critical evaluation or analysis comments about that particular system. So there could be some purpose behind why the report is prepared. So first understand what's the purpose, to whom is this a report to be addressed. So to the concerned person, like to somebody, to the CEO, to the CFO, so whatever, whoever is the person there, to whom some information is passed on in the form of a report. So write to that particular person in the organization, from who's writing that. So the student is expected to take the role of a management accountant, or some expert, or some advisor to the CFO, or whatever. So there are various designations that are used when the questions are addressed. So you have to take up that position, that role, and then in that capacity you will have to address that related concern area. That topic has to be elaborated. So who is the audience for which the report is being produced, what information would be included, and use a suitable layout for the report that is prepared. So the designs of performance reports. Then we know what are the problems that arise with quantitative data, qualitative data. Very generic. See, I mean, nothing that you have to know at this level. Quickly, let's run through that. The collection of data and data processing, the problems that arise with quantitative data that is in the form of numbers. So collecting the data is a problem, collecting and processing the data. Then numbers don't mean everything. So then again, the underlying causes behind these numbers have to be understood. Numbers do not convey the whole picture, so therefore underlying causes have to be looked for. Then figures cannot be looked at in isolation, because see, individually by themselves they may convey a different meaning. Let's say that if there is a profit percentage of a business unit makes a profit percentage of 10%, in itself when we look at 10%, 10% looks quite attractive because it is a double digit figure. But if it is, unless and until it is compared with a suitable comparator, on a comparative note, we would not know whether 10 is a good figure or not. So it has to be compared with a suitable comparator. Okay. See, maybe the industry average, maybe a competitor, a market leader, their profit margin, let's say if it is 14%, then on a comparative note, this looks little, I mean, it looks very bad. See, it doesn't stand on par with the market leader. So figures, if they are looked at in isolation, they can be a different thing. When they are compared with a suitable comparator, then they convey a different meaning. So finding a suitable comparator and taking up the analysis and the, I mean, getting the data from them and comparing. The competitors may not share the data, or the industry averages are not available at the time of analyzing the data, or some issues with that. So failure to use a suitable comparator or a benchmark could be a problem, because though the data is there, though the figures are available, but the analysis is not complete, because we do not know on a relative sense whether the information, the data that is available, it conveys the exact meaning. Then failing to understand underlying samples, when the samples are drawn, and then um, do they, I mean, do these samples represent the entire population? So that is an issue there. Then failing to understand percentages, many in the organization, some even at the senior levels, senior positions also, they don't understand numbers, they don't understand the absolute numbers, the analysis taken up with numbers, any kind of statistical analysis, the interpretation that is provided, they don't understand. That is a very common thing. So many do not understand the numbers, the analysis, and the use of these figures to take decisions. Okay. um, Therefore the concept of course we have not studied, because it's not part of our syllabus also. Therefore, on account of that, visualization has gained a lot of importance. So the data that is visually, I mean, that is presented in a visually appealing manner is data visualization. There are various tools that are available, different types of charts. Again, under charts we see different types, so all different types of charts, the dashboard, etc. So that makes things very simple and clear, and it becomes easy to understand the data. That is data visualization. There is something called as confusing correlation causality. So what is the meaning of correlation is, see, sometime back we studied in today's class what is the concept of data mining. What does it say? When the relationship is unearthed, okay, when there is a study to take up what relationship exists between the variables, that is called as data mining. So um, trying to find out and uh, the relationship, or um, the strength of the relationship, um, when it is found out, that we call it as coefficient of correlation. Are they correlated to each other? Is there any kind of a relationship with the between the variables? How do they vary? When one variable varies, what is the impact on the other variable, etc. So correlation is trying to find the relationship between the variables. So once there is a relationship established or relationship found out, then it becomes possible to estimate the trend out of that. Okay. So trend, if there is a trend, that can result in some kind of biasness in the user. User will always go with that trend. So if already there is a trend established, that can result in a biased opinion, and the judgment is dependent on that. Removing the trend out of the data is called as causality. Causality eliminates or removes that trend. So if at all, if that trend is already established, to take up the data without its trend, without, I mean, take the data in its raw form without considering the trend that is already identified from the data. Because the analysis, further analysis, if it has to be taken up, it should not be dependent on the trend which was already identified. So removing the trend from the data is called as causality. I do not know to what extent it will be tested. It is all a theoretical part which is given here. So just have an understanding about what does it mean by relation and causality. I'm not sure where would it be asked in the examination. Then we see what are the problems dealing with qualitative data. Qualitative data is not in the form of numbers. It is not in the form of numerical terms, but it is basically in the form of opinions. So anybody who gives an opinion about the data, it is called as qualitative data. See, this presents a problem since the information is often subjective. So such kind of data also has to be analyzed. Then only better decisions can be taken. So if the subjectivity from the data, if it can be reduced, I think it can be used in data analysis and interpretation. The big data also takes up this particular task of reducing the subjectivity. So from the qualitative data also there is some trend that can be drawn. So first step is it uh, uh, takes a trend out of that qualitative data, and that is used in the analysis. So it is possible to even analyze the qualitative data. Otherwise it is not possible because it basically is subjective in nature. So if it that can be removed, I think it can be analyzed to understand what's the trend in the performance of the data. So that's the concept about technology, what we've discussed to discuss. This is all what you have. So exclusively a question may come, but chances are little less. But the chances of a small part of this technology, information system and information technology being included in case studies is very high. So one part of the case study will be about the technology. So unless and until you have conceptual clarity about that, you will not be elaborate that particular part of that section question and then answer that. Therefore, you have to learn. Okay? You may be better off than me. Maybe you know much better information about that. So the younger lot definitely are more tech savvy, so you would be knowing things better. So you can give a better answer in the examination, moving a little ahead from the conceptual understand. What we will be doing now from now is all about measurement. Basically, the paper title itself is performance management. It is all about performance. The paper title itself is performance. The performance measurement, performance management. So, that is what has to be done. Until now, what we have studied is also connected to performance. So that is the background information. So some other things which we are expected to be knowing, that which is helpful in performance measurement. See, when we have started with the strategic planning, etc., vision, mission, CSFs, KPIs, benchmarking, different tools, models that are BCG matrix, etc. See, anything what we have learned was all helpful in planning. Now, these plans have to be implemented. As they are implemented, the performance is noted down and the performance has to be measured. So basically, everything is connected to performance because the paper title itself is performance management, advanced performance management. So that was not anything which is disconnected with the performance concepts. That is all connected to performance. But now, henceforth, every topic what we are going to look into and deal with, it talks about how the performance is measured or managed. Okay. Let's take a break for 10 minutes. Now the time is 10:20. So let's take a small break for 10 minutes and gather back. I mean, don't have to leave Zoom. Be there. I'll just put the recording on hold for 10 minutes. We can resume back at 10:30. Is that fine? Don't tell me nobody is listening to me. Anyone there listening to the class? Oh my God.
Yeah, yes, ma'am. I'm working and listening, ma'am.
Okay, okay. I just said we'll take a break for 10 minutes and then resume back at 10:30.
Yeah, yeah.
Don't have to leave Zoom. Be there. I'll just put the recording on hold. The next topic in the syllabus is measurement of performance. Now, there are three approaches to measuring employee performance for the purpose of appraisal. So, one is about by way of measuring the inputs that are used. Another way is about measuring the output or the outcome, result measurement of results and outcome. And as they are implementing the plans or utilizing these resources, what is their behavior in the performance? So that's another way of measuring the performance. So we have different things to connected to these things about how they are measured. We would be looking into those things now. First is we understand about what are the different methods of reward. The different methods of reward. Um, the first part of it is the basic pay. The basic pay that is paid to the employees. The fixed pay, or what we call it as the minimum amount of pay, or the basic or the fixed pay that is paid. The next one is part of their pay is dependent on what is their performance. So it is all related to the performance part of it. So performance related pay. Then certain other things apart from the monetary benefits that are paid to the employees. Apart from that, there are certain other benefits provided, like maybe transport facility, housing facility, some other kind of services that are given to the. One second, one second. Some other services that are provided to the employees in terms of housing, commuting, while commuting, transport facility, telephone facility, transportation. See, multiple benefits can be provided apart from the fee that is paid. Then sometimes when the organization makes super profits, that also allows its employees to share in those benefits. Like they are given an option to share the profits in the form of giving them shares. There is an option given to the employees to become the shareholders of the company by allotting them shares. That's shares option. See, this is one important area which we need to look into, because we're talking about the performance. We're talking about the performance of the organization. So the way the employees perform. So the management or the managers, what is their style of performance, or what is their style of working in the organization? Some of the managers are first one says it is budget constraint focused. So they are too focused on the budget, whether the implementation of the budget they take up or not. See, we did do one case study on BCG matrix few days back. So the BCG matrix was about different categories like um, no, we didn't do. Sometimes there is a need for reinvestment. Only when reinvestment is made or additional investment is made, there is a possibility of growth. I don't remember whether I have done BCG matrix with you. If at all, if I have done, you must be knowing that. So if there is a scope for growth, there is a requirement to invest additional amount. If they are looking at budget and there is a budget constraint there, they would not be willing to take up any kind of additional investment. The additional investment can result in a benefit for the organization, but that will result in they not going by the budget, or they it would ultimately result in they not achieving the budgeted targets, because additional investment will increase the expenditure, and that they will be labeled as someone who has not followed the budget strictly and achieved the budgeted targets. So their focus is on whether or not they have achieved their target. Their focus was on the budget part of it, budget constraint, but their focus is not on the benefit of the organization. So it is on achieving short-term budget targets, but not about the benefits what the organization can achieve, both in short run and also the long run. That is one style of management. The second one is about they are too focused on the profit conscious, profit. Their target is about maximizing their profit. The maximization of profits, any decision or any strategies that are taken up may prove to be fruitful in the short run, but they may not give the same result in the long run. If to maximize the profit, for example, if they um, take up anything about increasing the selling price or compromising on the quality or something like that, in the short run it may sound to be, or it may prove out to be beneficial. They may be able to maximize their profits, but that impact is seen in the long run. There will be an impact on the long run. So that is one thing which has to be considered. So um, if the style of management, it could be about focusing on the um, profit, but that profit conscious attitude will be profitable only in the short run, but not in the long run. Then there are managers who do not only look at the accounting aspects, the profitability aspects, financial terms, but they also consider certain other non-financial parameters, like looking at the benefit that is or value that is added to the customers, looking at maintaining good relationship with different stakeholders, providing certain benefit to the other beneficiaries or other stakeholders, quality aspects, catering to the quality aspects, uh, and then employee satisfaction, employee benefit. So multiple other non-accounting parameters are also considered by some of the managers. So that's another style of management. Um, it could be asked in the case study about maybe some information is given about the style of management, and then you may have to talk about maybe only in the assessing that behavior, or in a critical tone also you may have to talk about that. So how beneficial is it for the organization or not also has to be discussed about that. Then in this context we see that there are different problems of performance measurement. There could be a possibility of misrepresenting or misinterpreting the financial information. So that's one problem area where the data was not interpreted properly, misinterpretation or misrepresentation of the data. Gaming is a concept wherein the manager looks at his personal benefit over the benefit of the organization. That is gaming. Short termism, focusing only on the short run to achieve the targets. Measure fixation, when they look at the end result and then focus is only on the um, sorry, that's tunnel vision. Measure fixation is focusing too much on what measures that are fixed, or looking at the budget and whatever is decided as the standard to achieve those things only. Looking at the measures that are fixed as standards, measure fixation. Tunnel vision talks about looking at the end result and not focusing on what is the process through the tunnel, but aiming to achieve the result at the end of the tunnel vision. Sub-optimization is not utilizing the resources to the optimum extent in terms of achieving the targets. Sub-optimization. Ossification is an unwillingness to change. Whenever change takes place, there is no willingness to change with the changes that take place in the organization. So unwillingness to change, that is called as ossification. So conceptually, all these terms have to be learned because any of these terms also can be discussed when there is something related to the management's performance if it is evaluated. Some of the terms may be discussed and then you have to elaborate as a conceptual thing, or is it about any of these things? So you have to comment that it is about these things or give some advices, something about that. So assessment. So unless and until you are aware of what these terms are, you will not be able to do it in the examination. How is the performance measured in terms of financial aspects? So if it is financial performance measures in the private sector, as such, there's nothing new a student would be learning at this particular stage in terms of what tools are used to measure the performance, financial performance. The main technique that is used here is ratio analysis, and ratio analysis is something which is learned by every graduate, every accounting student, commerce student. The ratio analysis is already done in MA. It is there as part of the curriculum for every commerce student, and also it is a part of their corporate life also until the end of their career also it would be there, because most frequently used tool is ratio analysis. See, all those ratios which come under profitability, liquidity, capital structure, market value ratios, all of them have to be studied. The activity ratios, turnover ratios. So if you do not remember them, I think you should be remembering. You're also working, so you would be going through the reports and all. So I don't think you don't remember that, but brush up your understanding about what are the different ratios that could be used. So um, in the examination, the student may be asked to calculate few ratios and comment about the performance, or if the ratios are already calculated and provided to us, given interpretation of those ratios, what is the performance based on the ratios that are calculated. So you have to give a comment about that. Okay. So the different ratios that are used, the numerical values that are used are under the categories of profitability ratios, different profitability ratios, then different activity ratios. All turnover ratios are activity ratios. So what do these turnover ratios indicate has to be understood. Then we see liquidity ratios. What's the importance of liquidity? The need to maintain short-term assets to meet their current requirements. Then the capital structure, what impact it has, the gearing ratios, capital structure ratios. So all of them would be used. See, as such, nothing new is expected to be learned, but how to interpret them is an important aspect, which was all taught to the students at the MA level. So right now, at this point of time, nothing new is delivered to the student. Now the next topic here is responsibility accounting. See, responsibility accounting was also done by the students in PM, but what is new here at this level? The responsibility accounting will be studied in the form of case studies. Conceptually, the concepts are known to the students. Nothing new about that. because PM discusses everything in detail. The same content is delivered in PM also. So as such, the student is not learning anything new here, but the type of question that will be asked in the examination, maybe today I will not do, but next class, as soon as we meet in the next class, we'll start with a case study on responsibility accounting. So responsibility accounting. So what is responsibility accounting? Accounting system which accounts for the planned and the actual activities of uh, the responsibility centers. But what is a responsibility centers? In that note, we also have to understand about what is a responsibility center. See, in an organization where it is divided into divisions and departments and subunits of the organization, for each of these departments, when there is a manager appointed, the manager is delegated uh, the authority to take decisions, and based on the decisions, if he is also held responsible, then such a department or a division or a subunit of the organization is called as a responsibility center. So there is a manager of the responsibility center. Manager takes decisions, and based on the decisions, um, based on the results, he is also held responsible. Fine, that's the concept. So there are different types of responsibility centers. Uh, we see that there is a cost center, a revenue center. In fact, actually, some of the versions talk about a responsibility center called as revenue center, but sometimes it is silent about the concept of revenue center. Third one is profit center. Fourth one is a investment center. A cost center is a center where the there is only cost incurred by the center. There is no source of revenue that is generated by the center. So such a center is called as a cost center. Examples of cost center are production department, HR department. There is no source of revenue generated. They only incur costs. See, according to the explanation of what is a revenue center, a revenue center is a center where there is only revenue generated. They do not take up any cost to be incurred. So that is a revenue center. So some opine that there is no possibility of a revenue center to exist because sometime or the other there would be some amount of cost incurred. But also there are examples given for revenue center. If suppose there is some space available which is sublet to someone else, and against that there is some rent received, the operational expenses are also met by the one to whom the space is let out. So in that case, it's only revenue generated. But of course, at this particular paper, we this in the syllabus it is silent about the concept of a revenue center being there. Um, but if you come across, you see that yes, there is also a concept of revenue center existing. The third one is a profit center. Centers where they incur cost, they also generate revenue. So the difference between revenue and cost is profit, therefore it is called as profit center. And the fourth one is an investment center. Investment center is a center where costs are incurred, revenues are generated, profit is realized, and with that with that profit center, the amount of investment that is made is identifiable. What is the portion of investment that goes into that profit center is known. Therefore, it is such profit centers are called as investment centers. Okay. So there are also a responsibility accounting system is required to trace costs and give control information to the relevant budget center. So how do we evaluate? How do we evaluate the performance of different responsibility centers? The first one is a cost center. Cost center where they incur only costs. So how is the performance of a cost center measured? The performance of the cost center is measured as a comparison of what is the actual cost incurred versus what's the standard cost that is decided for the cost center. So, what is the total amount of cost incurred? Is there any variance in the cost that is on comparison with the budget? So, is there any variance in the cost variances? Then, cost per unit and other cost ratios, those things are calculated. What's the amount of cost per unit? See, when cost per unit varies when they are operating at different output levels. So, what is cost per unit and what other cost ratios? So, those things are taken into consideration for measuring the performance. Then, any other non-financial performance indicators are also considered, like what quality aspects, what productivity issues, efficiency ratios. So those things are also taken into consideration when the performance of cost centers are to be measured. Second one in the list is what's a profit center? Profit center where revenue is generated, costs are incurred, and profit is realized. So all cost measures that are discussed are applicable to profit center also. Apart from that, all possible measures to maximize on their revenue and maximizing or improving their profitability. So those things will be taken into consideration. So all of the measures of cost center are applicable. How do they maximize on the sales and then profit and sales variances, profit margins? What is the market share? How to what extent were they able to capture the market shares? Okay, working capital ratios, then any other non-financial performance indicators related to customer satisfaction, because only when they capture the market that they can maximize on the revenue and profitability. So consider anything related to customer satisfaction. The third one is in investment center. Investment center where investment is identifiable with the profit center. So see, to maximize the profit, just now we've discussed all cost measures should be considered. All measures to maximize the revenue and profit has to be considered. So the same thing is applicable here, but it is just not sufficient that profit is considered. Profit is to be looked into in relation to the amount of investment that is made. So the tools that are used or the variables that are used to measure the performance are what is return on investment, ROI, and what is residual income. So the performance is measured, the performance of investment centers is measured with the help of ROI and RA. Let's discuss about what is ROI, what is RA. ROI says return or profit upon investment. So profit by the amount of investment gives us ROI. But then sometimes ROI is interchangeably used with certain other terms, like what is written on capital employed. See, the amount of capital that is raised is the investment that is made into the business. So interchangeably the terms capital employed and investment are used. So here again we see that it is the profit amount that is available for the amount of capital that is employed in the business. So profit upon capital employed. That is ROC. Another term in certain contexts also is considered to be interchangeably used. We call that to be as ROA. ROA talks about profit upon assets, profit by assets. See, the investment is basically made into assets. So, in situations where any information about investment of capital employed is not known, in that case, assets, the total amount of investment that goes into assets is taken as the base. So, here it is an effort to understand if there is some amount of investment made into the responsibility center, as against that, what amount of profit is earned. So, that is ROI. Another tool that is used here is called as RI. What is RI? RI says RI is equal to there is controllable profit, profit that is earned, controllable profit, operating profit. These are terms which are taken. So controllable profit from this, see, operating profit, EBIT, controllable profit. So whatever is the term that is referred to. So this profit should be sufficient enough to meet the cost of capital. See, out of cost of capital, only interest is an obligation. Whether sufficient profit is available or not, also um, in such situation, also the amount of interest has to be made. There is obligation only for the interest amount, but dividends there is no obligation. Dividends are distributed only when there are sufficient profits available. Okay, so controllable profit minus the um, see, according to the obligation wise, we see that interest is the obligation. So whether profit is sufficient enough to meet the interest, do we check only that part of it? No, it is about whether in spite of no obligation being there also, whether the cost of capital is met or not, overall cost of capital or weighted average cost of capital. See, what does it mean? For the amount of investment made, so it can be taken as operating assets or average assets or something. On this, the amount of weighted average cost of capital that is calculated will talk about the total amount of cost that the company or the organization has to meet. So operating assets into WACC. See, even in situations where there is no obligation to pay the cost of capital, in situations where there is no return paid to the shareholders, shareholders would be dissatisfied. They may withdraw their investment, and that can have a drastic or negative impact on the organization. Therefore, see, did they earn sufficient profits to meet the overall cost of capital or not is what is taken into account. So RA talks about from the controllable profit or the operating profit, whether overall cost of capital can be met or not. So from the profit, if overall cost of capital, if it is deducted,